We have 4 days left until the fate of the United States of America is determined, and we also have $20 billion every single day starting tomorrow that need to move somewhere. The markets are going to get crazy, so buckle up, Buttercup, because this money needs to go somewhere. It's going to get crazy, and you guys are saying that the United States of America, 80%. I know, I just fact-checked myself. 79%. Can we just round? 8 out of 10 of you, or maybe you're missing a shoe or something. 8 out of 10 of you say that the United States is completely out of control. And I say, cue the fire. You have not seen anything yet. It is a system that is set up to just basically implode. But we have 4 major things that will reshape, or events that will reshape the world. Number 1, you have our consumer index, so we get to see how that's going to go. The Federal Reserve, in 48 hours, we are going to find out, hey, what's interest rates? How expensive is money? And if you say money's not expensive, it's just money. No, it's not, because money is debt. In the system that you and I have created, I know I did not create it, you didn't create it, they created, the elites that pull the system. It's a debt-based system that has to be paid back with interest. So if you want to buy something, right now, money is expensive. Also, overseas, the euro dollar, the dollar is expensive. And I know some of you will come at me and say, Mike Maloney says the dollar is not money. All that stuff is not money. This right here, this stuff, silver, this is money. Well, guess what? This money just got expensive. I know it says $19 for an ounce of silver, but you try to buy this for $20, you can't. I mean, you have at least a $10 premium, 1/3 on top of just that. I mean, even heading over to free market eBay, take a look at that. $40, $40 for just one little $20. And people are buying them, 10,000 plus sold. But we also have job reports coming. We have midterm elections coming. No, I've not been drinking. Well, unless you want to call Zevia a drink, then okay, then I've been drinking. But you better make sure that you have your bunker ready. And also, the markets do not look pretty. Hey, look, crude oil down, Russell down, NASDAQ down. NASDAQ was really down, picked up a little bit. This morning was a vomit fest. And the S&P 500, bring in the plunge protection team, please. Jittery stock traders. Now, I'm going to pause it right there. So I speak news. I do not trade news. Just set all of this news aside. I look at charts. Charts will predict what all of these cool little news stories have to say. Jittery stock traders, 4 days that will show the market's fate. And also, out of those 4 things that are, throw in earnings. That will do a little jolt. Investors just got over a hectic week. If you're a trader, every week is hectic. Contending with a blitz of earnings from some of America's biggest companies. And let me pause that there. If you think earnings are bad now, wait until next year. You haven't seen anything yet because it takes time. When the Fed tightens, when things start to happen, it takes time. Like even the watch industry. Because I know a lot of you that are subscribed to this channel, you guys are well-to-do. You don't come, you trade stock. You have money. You start business, or you have business. You're like, tell us where it's going. The watch industry is actually kind of a good indicator as to where we are going. You want to take a look? You want to do a trend? What is the trend in the watch industry? I'm showing down. That's why I've been saying over the last probably 12 months, 15, ever since the yield inverted, I'm like, oh, there we go, kids. Learn how to trade a bear market. It's all going down. No, the housing market's going. It's all going. No, Bravo. You don't know. My uncle just sold his house. There's actually someone who wanted to buy it. The watch industry, the crypto industry, everything's great. I'm like, I know it is now. It won't be. So I told you, don't buy that car. Don't buy that watch. You got to wait. That's what smart money does. Now we can pick up all those things at pennies on the dollar later. But back to the story. Blitz of earnings. Companies as well as pile uncertain economic, sorry how I just comboed a sentence in there, and geopolitical news. I like geopolitical news, but you guys don't like it when I talk about it. But what's coming may be even more worser. But again, it's just news. We don't trade news, and that's okay. So you got the Fed's going to announce interest rates decision. They already did. 2 days later, October, jobs report. Okay, I'm sure they're going to be great. I mean, the way they calculate jobs would be like a kindergartner. Like, you go get 4 jobs. I'm going to do Uber Eats. I'm going to drive for Uber. I'm going to work my regular job at Target, and then I'm going to have a side hustle. Our government's like, oh my gosh, you just added 4 full-time positions to our economy. That is incredible. But we have earnings season, Bank of England interest rate decision, whatever. Earnings, don't really care, exit prior to earnings. FOMC rate decision, we already know it's going to be 75 basis points unless someone, one dude tells Wall Street Journal, they think that it's like the Fed tells the Wall Street Journal reports it, and then we kind of know what's going to happen because the Fed doesn't want anyone to go, what's going on? They project, like how companies will leak something to see like, oh, the people really don't like it. Apple leaks something, which really doesn't matter. It'll be the same thing that they've done for the last 10 years, but everyone still buys it, which I am perfectly fine with that. I will trade it. Buckle up, Buttercup, Goldman trader. 2 stories on this one. I said this reminds me of 2008. Hey, me too. Congratulations. Good time to make some money on the way down. That's exactly October when I sold all of my properties, my house, my rentals in Texas, everything, stock. I already said stocks. And I did the same thing again. But now I'm going to make sure I make money on the way down. More times this week than I can remember. Now coming in from the same guy at Goldman Sachs. He's saying there is $20 billion. I already told you that. It's almost $2 trillion that the computers need to move. So be ready. Starting tomorrow, $20 billion of daily stock demand until year end. Just be careful that you don't get all FOMO'd, okay? Because what goes up comes down. So you can make some money coming up, but the coming up probably won't be that much. This one, the end of the year, October, November, December, and then Santa Claus rally. It's going to be good, but don't think, oh my gosh, I mean, remember Y2K, year 2000, same thing. And then right after it, bam, sold off everything. Everyone was running around, no clothes on, expecting the melt up, except for me. I had a little Speedo on. Driven primarily by technicals, and that's what you should do too. Everything is technicals, even the computers. It's all based on technicals, amongst which buybacks and CTAs, these are the big computers covering, as well as earnings season that is nowhere near as bad as expected until it is, which would be next year, which I actually have in the charts. This would be the S&P 500. The 500 is because it has 500 companies in it. All right, so look, see this white line? At that point, May, is that May? Everything that the Fed's doing, everything that everyone's doing, this is when earnings are going to show bad. This, from here to here, not so bad. And also, I need to clarify something with you. In a bear market, which we are in, see this white line? Bear market. And it's not just the 200, so just chill for a second. In a bear market, your runs up usually are not as big as your runs down. So yes, for some of you that like to swing trade up, that's that indicator, that little red line. Also, my bear market course, $200. If the link is there, congratulations, you got the code. If it's gone, I'm still filming the videos. If you're in it, don't email me and go like, whoa, why is this missing? Well, that's because, John, you paid $200 for a course that I'm not done filming, so you got a huge discount. But also, if you're really, really new, you should probably just start with my swing trading course. I do offer stocks every single day. I have a Bravos daily watch list. Dicom was actually in one of them, and that was a nice little run. See the beatdown? See the 200-day moving average? Up, it's above it, gets a beatdown. This is what we do. It's pretty basic. It's basically simple. Here to here, and for those of you like, that's a 20% run. Look, confirmation there, you're above the 50 on the RSI, just simple things. And I find the stocks, and you say, okay, that was very good. You are a smart man. No, I'm not. It's just years of doing this. It's pretty, in my head, I'm like, nope, yep, nope. S&P 500. So looking at this, we're Probability. Someone emailed me. I said, I don't know. I don't know if it's going to. Just a high probability it's going to come up here, hit its head on the 200 and get rejected. But I mean, in a bear market, sometimes it can't even make it. I mean, look at your RSI. It's already starting to roll. Your MACD. Sorry, see, it's like cooling off. See, this is where you sell or you put in a sell order. You make money going down. Okay. And then you wait until it crosses right here. I mean, just between those two areas here. Let's just take a little peek here. We're going to go with a vertical line. This right here, this is where you put in a sell order. Okay, when those two lines, see this, converge, diverge, when those two lines right there meet, again, no, this is a fakie. It didn't, so you don't exit yet. Let's just say you exit right there, okay? What did you make? It's just trading off of the MACD. That's it. Pretty easy. Okay. But I would have said it's going to hit its head right there, which it did. All right. So on this one, what was this one? What was this run? On the way down, you made about 11, 12%. Beats your savings account. But my point being, the runs up aren't that big. Okay. I mean, you can grab them, but you probably trade on the 4-hour. The runs down, right? Those are big. Also, the gaps down. Boom. You're just like, oh, I'm taking a swing. Look at this one. Let me just zoom in. For those of you that want to know how to trade here, do you see this? You're like, I'm going to swing trade this up in a bear market. Not the best idea. But anyways, you come in right here, right? And then boom, it like gaps. It's like, no, you didn't. What was the swing from here to, you could have made some money. I'm saying you're breaking even on that one. Fall asleep at the wheel, you lost money. You decide, oh, I'll just wait until it rebounds, you lost more money and more money. And if you're like, I'll just add to my position, let's just keep going. No, you'll continue to lose money. In a bear market, when the Fed is tightening, there has been 0 bottoms, okay? So don't get all your hopes up. There hasn't been one single bottom. So this rally that's going to happen, high probabilities, because this $2 trillion needs to go somewhere. It's probably going to shoot the market up, and then you're just going to be pants. And you're like, oh, shoot. Morgan Stanley, Wilson says end of the Fed tightening is nearing. I don't care. Is it here? No. Indicators suggest Fed pivot sooner rather than later. Strategists, those are those high-paying guys, see S&P 500 rallying to 4,150 points. Oh my goodness. Well, let's take a look at the strategists and see where they're calling it. 4,150. That would be on the 200-day moving average, dummy. You see, they all just take my course and they're like, so let me tell you what's going to happen. Based on the current news and everything that's going around in the world, the geopolitical issues, I foresee that we're going to get to about 4,150. I mean, tell me more, Morgan Stanley strategist Michael Wilson. How do you get all this? Well, I'll just vomit things like recession indicators, yield curve. This is why we'll throw in the word Fed. All eyes are on central bank, 75 points. Tightening, I'll give you a little chart here, which shows you nothing. This kind of price action. Oh, use price action. Isn't unusual towards the end of the cycle. But now let's look at the paragraph that here's the meat of it. Here we go again. About a 6% gain from Friday's close amid their short-term bullish call. All right, it goes, you swing it up. All right, 200. They use 3,700 as their trailing stop loss level. That's smart. Last week, Wilson said the bear market is likely to get out of my hair to end sometime in the first quarter. Okay, Wilson. No. But it's okay, Wilson. You may be right. Who knows, right? The charts do know. Market Insider. Oh, wow, there goes your NASDAQ. That's what I was looking for. It's a little bit more pain. Stocks could sink. See? Bad news, Wilson. 25%. As what? The liquidity crisis. That would be money is expensive. It isn't out there. You're not taking out loans because money is loans. You're not doing it. You're not doing house. You're not doing car. You're not doing fancy watches. You're not doing boats. Money is drying up. Liquidity crisis in treasuries. threatens to spill over to other markets. Analysts say, tell me more. And they're saying it could spill over into China. It already did. It started in China. Fools. Treasury, but we have a solution. Janet's going to come to the rescue. She's going to come wearing her sexy little red cape on this Hallows Eve. Recently acknowledged that the possibility, because Jerome's not doing the deal. He's not doing what he's supposed to do. Like, he's screwing everything up. Buybacks after her department surveyed. We're going to take a survey of dealers of treasuries about a potential program. Well, what would that potential program be? That would be called buy bonds, buy treasuries, buy all the debt. This is not debt, okay, just to let you know. You should be trading bonds. You should be trading stocks. You should be buying gold, silver, things like that, because that's actually real. And when when we have the rug pull, okay, and they're like, what do we do? The things that really don't exist. There's very limited amounts of gold, silver, Bitcoin. That's when those things are going to rally. But thank you for hanging out with me on this Hallows Eve. Go shove some candy in your mouth. Make sure you subscribe. I love you. I want you to stay free. Stay free over safe. And I'll see you tomorrow.